Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the third week of October, as you can see, starting from 21st of October 2024. So before starting the weekly breakdown, let me quickly show you the news, go over the news. Monday there is no news, Tuesday there is BOE Gorman Bailey speaks, Wednesday no news, Thursday there is PMI news whole day, and on Friday there is GBP news, BOE Gorman Bailey speaks. So looking at the news, we can clearly see it is not a bad week to trade from, probably because of how this week is looking like. This week was literally bad because GBP news throughout 3 days we trade London, so it would literally affect our trading. But in this week there is no such news in our timing which will affect our trades, so that is exactly what we want to. So now that is the news aspect of trading, and now going on the weekly time frame, we can clearly see the previous weekly candle closed as a bullish candle right around here after filling up some of the fair value gaps right around here. So going on the weekly, my bias was clearly bullish or doji. My bias was not one of the cleanest on the weekly time frame on the GBP USD. You can know that, and we supply demand, I will not show it, so on and so forth. And on DXY also my bias was clearly bullish. On DXY my bias was clearly bullish because of how this candle closed. It's a Marubozu candlestick. Yes, you can argue there is a fair value to the downside, but as of now it is not showing any signs that the market is going to go and fill up that fair value gap. So right now it's clearly showing that the price is going up, and yes, you can argue this is a doji, so my weekly bias going on the next week was not clear. That is why I've written DXY is bullish and GU is also bullish as well. So the weekly whenever the weekly bias is not clear, that is when I tend to trade with the daily bias and literally align the daily of GU, DXY and EU, and whichever pair is giving me a cleaner bias, cleaner zone, cleaner trade to trade from, that pair is what I trade. Basically that is the bottom line. So now going on GBP USD, starting my back testing on the daily time frame because I trade the daily bias. So according to how this candle closed right here on Thursday, what the hell is that? Okay, let me quickly show you. Okay, so this candle right here is Friday, now it's fixed. So here we can clearly see the price on GBP USD is bullish according to how this candle closed, and going on Monday my bias will be bullish because of how this candle closed. And it's also, but there is a catch here because also the price is rejecting from a daily supply zone. Whenever a candle is rejecting from a supply zone or is in a supply zone, you always have to monitor that zone because there is always a chance there might be a reversal from that point. That is the reason why we are marking that zone in the first place, right? So going on Monday my bias was bullish on GBP USD, and on DXY it was bearish because of how this candle closed, right? So on Monday I was looking for sales, there was no news on Monday, so I was looking for buys on GBP USD. So if I'm looking for buys, I will look for some sort of demand zones on the H4. On the H4, the previous week highs, previous week lows. That is when I go to the H1 to mark some sort of zones, and I didn't took any trade on Monday, I believe. On Monday, okay, it was a buy position on Monday. There was a demand zone in this New York session right here. Beautiful New York session. This is a New York session zone because it also swept the London session right around there. There was no clear zone to trade from on Monday, and if I took the trade regardless, it would have been a loser. As you can see, on Monday we took a loss here, right around here. Maybe I would have taken this trade after seeing this rejection in London session. Monday was a loss. London session, it was a loss, right? London session, Monday my bias was clearly bullish. Not clear, but obviously it was bullish. So I was looking for buys. In the live markets, maybe I would have not taken this trade because the weekly and daily are not aligning, and also why do you want to hurry a trade, right? So there are going to be opportunities for the rest of the week, so stay patient. Only the guys who can stay patient are gonna get rewarded in this market. The market doesn't care about how you feel, about what you are going, right? So going on Tuesday, my bias was clearly bearish now according to how this Monday candle closed. It literally engulfed the previous two candles. You can argue that it engulfed the previous two candles. Going on DXY, it is also a bullish engulfing candlestick, engulfing the previous two candles. So obviously looking for buys made sense on DXY. That is, looking for sells made sense on GBP USD. That is when I go to the H4, look for some market structure shifts. So on the H4 there were no market structure shift, as you can see. That is when I go to the H1, and on the H1 time frame there was a beautiful supply zone to trade from, I believe. There was a beautiful supply zone here. I waited for the Asian range to close. I'm looking for sales, right? So New York session gave us a beautiful sell right here. Beautiful sell right here on New York session. So I would like to trade this supply zone on New York session on this H1 supply zone. Waited for the Asian range to close. It gave us a fake move again, as you can see, which was used as inducement, and maybe I would have taken this trade or maybe not. I would have not taken this trade here. Genuinely, I would have not taken the trade, because this is not our timing, and we know the kill zone timing of London when the momentum appears is this zone right here that I've marked, right? So that is when I waited for my entry signal, which I didn't got, I believe. So going on Tuesday, it was clean. The bias was clean, the zone was clean to trade from, the Asian range was clean, everything was looking good. But this trade this trade happened to be from a fair value gap, which we don't take, because fair value gap trades are not that high probability, because we don't know where the move might happen from. And here we can see on the H1 time frame clearly a fair value gap was there. So this was a fair value gap trade here on Tuesday. If the same movement that happened right here happened from this H1 supply zone, then I would have taken this trade 100%. But also I have written the weekly breakdown. This trade right here from the supply zone was so clean, and a clean trade, but after a long time, but it was a move from the fair value gap, so we didn't took it, and you can read the rest. On Monday there was no clear zones on the H1, so mark the M15 zone, which was not the strongest, but tried a buy position from there, and it was a loss. It was also in our time window, so it was valid. So Monday was a valid loss. Tuesday we missed the trade, part of the game, right? That's part of the game. So now Monday is a loss, Tuesday is a literally our zone didn't get respected, so we didn't took the trade. Now that is when I go to Wednesday. Now going on Wednesday, my bias is not clear because of how this candle has closed. On Tuesday, it literally filled up the fair value gap, and also it's looking like it's rejecting, and it is an indecision candlestick on GU, whereas on EU it is a clear bearish candle right around there, right around here, right? That helped me to bias my trade here. And also DXY was looking so bullish on Tuesday, so looking for buys on Wednesday made so much of sense on DXY. That is why I was looking for sales regardless of the doji. Regardless of the doji on the daily, I was looking for sales on GBP USD. There was a supply zone right around here. I didn't mark it, but I can spot it. There is also a break of structure right around there, and that is when I marked my supply zone to trade from. I waited for the Asian range to close. After the Asian range is closed, there was a supply zone right here, which we missed on Tuesday, right? So everything is connected in this strategy. Literally the previous days are giving you the trades for the next days, so that you can be aligned with the market. Right now I am focusing on both back testing, front testing. That's why it's a bit confusing, maybe because I am doing so many things at the same time. But after my back testing is completed, I will go all in. I'll literally focus on my back testing 100%. That is when, sorry, front testing 100%. That is when I can guarantee you for a fact I'm gonna start see results. So here we can see I'm looking for sales from this sort of supply zone again, and which tend to happen or no. Let's see. So going on the M15 now, the price is a bit laggy. The laptop is lagging, I believe. So going on the lower time frames like the M15, there was a supply zone right around here, but I didn't mark this supply zone. Why? Because this supply zone was already mitigated by the Asian range, and the supply zones that are mitigated by the Asian range, I don't consider it. And yeah, the move did happen. This move literally I could have not caught, I can guarantee you for a fact, because this trade maybe it was a MAC model. It was a Rob Donos MAC model. I have also written here it was a MAC model Wednesday. As we can see, there are clear beautiful zones, but I don't trade MAC models whenever there is a clean beautiful zone to trade from. On Wednesday there was a beautiful supply zone to trade from. That is the reason I didn't took this MAC model. I would not have taken this I would have not taken this MAC model, right? So that was Wednesday, and also the New York session was very tricky. New York session was tricky, and yeah, that was Wednesday. Now Tuesday and Wednesday, the bias is literally playing out. The market is going down, but it is not giving us our setup, our perfect A-class setup, right? in this case of scenario, whenever the market is doing things like this, it's literally going to the downside, it's clearly bearish, we can see, right? That is when the market tend to not give you your perfect setup, and that's totally fine. And whenever the market is not giving a perfect setup, you need to adapt to the market. The market will never adapt to you, meaning you need to adapt to the conditions in the market. The market is not going to your supply zones, so you need to adapt and take the trades earlier, meaning don't break your plan, don't break your trading rules. But even though you can do things keeping that in mind. So according to how this Wednesday candle closed, now on Thursday I'm looking for sells again on GBP USD, because I don't trade against the bias, I trade with the bias. So my bias is bearish on Thursday, my bias is bullish on GBP on DXY on Thursday. And if I show you the news, Monday, Tuesday and Wednesday there were no news, and Thursday there is whole day there is PMI news, so we also have to keep that in mind. So going on Thursday I'm looking for sell. That is when I go to the H4, blah blah blah. There is a break of structure right around here, and after this break of structure we wait for the Asian range to close. We mark our supply zones. If I'm looking for sells, I mark for supply zones. If I'm looking for buys, I mark demand zones. So in this case I was looking for sells, so I marked the demand, I marked the supply zones. So I was looking for a trade from some sort of supply zone, from some sort of this M30 supply zone right here, which was made on New York session. This indicator right here, New York session and London session, literally helps us so much, because it literally shows us the move that happened in our session. So the first trade that I've taken was a loss in London session, but also we got to learn a bunch of things on this trade. Like, this was a supply zone made on New York session, right? So we took a loss on the supply zone made on New York session in London session, and it was a genuine loss. I would have taken this loss, I believe. But I have also learned one thing, that after the price entered the order block, you're willing to trade from, you don't want to see a direct rejection like this. The price is entered, you don't want to see a direct move. What you want to see is some sort of accumulation of orders. Manipulation will be good, right? But you want to see some sort of accumulation, and then after the change of character you enter at the change of character, or you wait for the OTE level entry or the equilibrium. So that is exactly what I was trying to say. Accumulation, manipulation and distribution, that would be more probability. That doesn't mean that this doesn't work. This also works sometimes, but that is what I would look, that is what for me a good probability trade would look like. So now, just because this London session trade was a loser doesn't mean that we will not trade New York. No. One more thing, even if the London session is a loss, if it makes sense to trade New York, and the bias is still clear, the zones are still definite and clear, like it was in this trade. There was an M30 supply zone here on the London session, so the New York supply zone didn't work, but the London supply zone can work. So that is when I waited for my session, which is New York session, that I have already marked. My session I have already marked with the indicator. So after my session has appeared, I literally what I wanted to see in a trade, the accumulation, manipulation, the M15 rejection, and then the change of character. Exactly what I said I saw in a trade. And when I saw this in a trade, I literally didn't wait it. I didn't self-doubt myself. I didn't self-question myself. I took the trade regardless. That is what you need to learn. You need to learn what, once you have seen what you want to see in a trade, you enter the trade regardless, right? So this was a winner on Thursday. I have also journaled this trade as a winner. You guys can see that on my playlist. And yeah, now according to how this Thursday candle close, on Friday I'm looking for buys, because I trade with a daily bias, and in this week, especially in this week, my weekly bias was not clear, so I was trading with a daily bias. So trading with the daily bias, it made sense DXY on Friday to go down, to go to some sort of demand right here, to continue to the upside, or to break to change of character to the downside, to continue to the breaking structure to the downside. So according to how this Thursday candle close right here, I'm looking for buys on Friday. So if I'm looking for buys on Friday, that is when I go to H4 and look for some market structure shifts. On DXY, on GBP USD, there was no market structure shifts, and on the H1 maybe there is. Let me see. On the H1, yes, there is a market structure shift right around here. I didn't mark it, I don't know why. There was a change of character right around here, and that is when I wait for the Asian range to close. And after the Asian range is closed, on the H1 I can't spot any sort of demand zones right here, right? Because it's very, very tricky. Right here there is no clear no clear demand zones. My bias is clearly bullish, so I will look for some sort of demand zones. That is when I go to the lower time frames like the M30. Even on the M30 there was no demand zone right here. That is when I go to the M15 now. And when I go to M15, I could literally spot a beautiful demand zone right here. So this same idea right here didn't work on Monday, right? On Monday, marking demand zones on the M15 didn't work. But in this case, it worked. Meaning, it's just the probability. It can work some days, it doesn't on some days, right? That's totally fine. You gotta let the probabilities play out and do the things regardless. If you see what you wanna see, that is when you enter the trade. This was in our time window. The Asian low got swept, point of interest mitigation, everything we want to see in a trade was here. So we executed this trade on GBP USD from this sort of demand zone on the M15. There was a market structure shift. The bias was the demand zone was with the bias. So yeah, that was a beautiful trade right here. It was a 1:4 risk to reward. So Thursday and Friday we caught a winner. On Thursday we also caught a loser. And Tuesday, Wednesday we were not able to take the trade because it didn't happen in our like we wanted to see. And you can see the overall picture of the market. Literally the price is literally going down and the higher time frame is literally bearish, right? Monday took a loss, Tuesday, Wednesday missed the trade, Thursday 1 win, 1 loss, and Friday was a win. So if I took all of these trades throughout the week, I would end up as a winner. This week would end up as a winning week. And basically that's the weekly breakdown for you guys. And yeah, let me see how the weekly candle closed and then I will close this video because I don't want to waste my time. I have to do 5 more back tests. Here we can see the weekly candle is literally closed as a bearish candle and didn't respect this weekly fair value gap right here. And now the next fair value gap is this one right around here. And yeah, even next week my bias will be bearish because of how this candle closed to fill up this fair value gap until and unless. And also whenever there is a demand zone here and there is a fair value gap and the market is literally going down in like in this example, the reason why we are marking this demand zone is to look for a potential rejection. Meaning whenever the market is going down making lower highs and lower lows, where will the market or where can the market have a potential rejection from, right? If it's bearish, we'll mark demand zones to look for a demand rejection, and when the market is bullish, making a bullish break of structures, that is when I mark a supply zone to look for a supply rejection. So in this case, it was a bullish, bearish leg to the downside. That is why I mark this demand zone to look for some potential rejection. And yeah, that was the weekly breakdown. Hope you guys get something from this video, and yeah, if you do, let me know.